이어서는 또 CBDC의 트렌드에 대해서 계속해서 논의를 좀 이어가 보도록 하겠습니다. 방금 발표해 주신 라이언 커클리 글로벌 세틀먼트 네트워크의 공동 설립자님과 그리고 카일 손린 글로벌 세틀먼트 네트워크 공동 설립자님을 모시고 CBDC와 토큰 증권, 디지털 금융의 미래를 말하다라는 주제로 파이어사이드 챗 진행을 해보도록 하겠습니다. 여러분 다시 한번 큰 박수로 맞이해 주시면 대단히 감사하겠습니다.
Hello, good afternoon. Thank you everyone for being here. Thank you to eDaily and the Security Token Offering Summit team for hosting us, and Flip for being such a gracious host. We're very happy to be here again for another year supporting the STO Summit here in Seoul. Ryan, I really enjoyed your presentation. I certainly am familiar with much of it since we're building the business together. And so for this conversation on this topic at large, I kind of wanted to ask you a few questions around maybe some of the common themes that people may have around some of these narratives and hear some of your perspectives. So before we do that, I'm happy to be here. My name is Kyle Sonlin, and very, very excited to chat with Ryan today. So Ryan, maybe the first topic, especially on central bank digital currencies, that is on most people's minds is about privacy.
Yep.
So could you talk a little bit about the surveillance aspect of this and whether or not that's something that can be avoided, or how do we mitigate the risks around reducing freedoms of currencies moving around for the end customer?
Yes, so I think first and foremost, I think it's a great question. I think it's one of the largest concerns in crypto. That being said, if you think you have freedom of your money now and freedom to move it around, I want to know what bank and what currency you use. Because near as I can tell today, between digital payments, credit cards, loans, to just where your money sits in your bank account, assets are frozen in almost every country in the world. You don't really have control at the end of the day, and there is full traceability. It goes even a step farther. We've seen Bitcoin lead to arrests from governments, cartels, all the way over to terrorist financing, et cetera. The traceability is there already. The privacy has largely been gone for many, many, many times. And as we continue to talk about ZK rollups, roll downs, and how it can create a more secure and private environment, we're not really meeting governments, banks, or anyone where they're at in terms of what they have to follow on regulatory. So I think as much as we have this utopian pipe dream of privacy inside of the crypto industry, if we step back, a CBDC is no more, no less private than our current banking system today. If we approach it from that view, I think then we get into the interesting conversation of, can we make it more private, or can we make it where it's a more fair system towards an end user, i.e., let's say a government gets sanctioned and you have an end user who is just a farmer trying to make ends meet. Does their currency get sanctioned where they can't receive or have banking to retail, right? Could we just sanction the government and oil refineries in Iran instead of looking at sanctioning every single person to the point where they can't receive money from family in the US?
So, is the main value proposition from the customer side or for the citizens side, before we go into the institutional aspect of this, is the main benefit then for the end user, for a citizen, to have cheaper transactional systems from a remittance and from a payments perspective, or are there other benefits? Where do you see this really being if you're an institution or you're in a regulatory capacity, you need buy-in, right, from the public?
I'll answer this in two ways. I think there's the stable countries and economies, and there's the unstable. For the stable and developed economies, the biggest thing is it's just quicker, it's easier, there's less fees. And ultimately, your credit card to your bank account can be tied together instantaneously. Your interest rates will go down because there's transparency. In real time, you can have taxes paid, et cetera. It reduces burden. If you get to the kind of the why did I get excited about this business? Why is this something we got to? I spent a good bit of time helping work on some refugee crises. I watched people who did everything right in their life as the country falls, they flee the country. They no longer have access to their bank account. Their bank account has money that is backed by gold. It is, by all effects, somebody is going to have that money. And we're seeing it happen in Syria. The Bank of Syria still has a lot of gold. However, the people that fled, they no longer have access to their bank accounts. They no longer have access to that money. And so this really is actually giving individuals the ability to have long-term ownership into their money, irregardless of global conflict, climate conflict, any sort of crazy events that can occur in which you could be displaced. And while it's easy to say in many countries this will never happen to us, at any given time, we see anywhere between 2 to 4% of the world experiencing this. So I get pretty excited about what this can do for the long term.
Yeah, it's a really good perspective because this is a real problem for people all over the world, and it's a constantly evolving situation. I think on the other side, and before we even go to the institutional capacity, there is a concern, and we discussed this a little bit last year here at the STO Summit, from a cybersecurity perspective, which is something that I think that's only growing as a potential risk factor or threat, is the future of quantum computing, the future of AI, and how these things could potentially pose a risk to a potential customer or user in losing control over their funds or losing control over their accounts. So can you talk a little bit about your perspectives on building quantum-resistant software and how that's beneficial for these types of markets and for the stability and overall health of an economy?
Yeah, so one thing that we are really bad at in banking and government is planning for future events that are not guaranteed and we can't give a timeline. We've seen this with energy, climate crisis, et cetera. In general, it's a deeply unpopular place to build for something that you don't even know is going to happen. This is where we come in to be a bit different, and we say, hey, as a third-party institution, we can provide the rails and safety that currently does not exist in our banking industry. You talk to most banks and central banks, and you say, what happens when the Q event happens? And what do I mean by Q event? I mean it's when a third-party actor that is malicious gets access to a quantum computer. To get a little specific, it's typically around 200 qubits. Most computers we have today are 60 to 80. That is where 256 hash bit encryption gets broken. That's where we see 1024-bit, we see any real means of RSA encryption break. What does that mean to the world? It means every single transaction you have is vulnerable. Every single piece of information you've ever given to anybody is vulnerable. And all the way down to the ability to turn the lights off in this room because you shut down a power grid. So as we build this, while this is built for finance industry, this has many applications beyond it, because if you don't have your data stored in a quantum-resistant manner that is safe and cannot be hacked or accessed, and you don't have transactions that occur in that, everything you do in every business and every bank is so vulnerable to it. And it's almost an apocalyptic level event when we no longer can trust any institution or any interaction. And that's why I think what we're doing more than anything is building trust.
Well, I think that maybe to move to an opportunity as opposed to some of the scary risk factors, which are, I think, very important to acknowledge, and we've purpose-built to try to start avoiding and understanding the risks that are present in what could be a potential future that we face. There is another opportunity here with respect to Forex and financial transactions that are moving internationally. And one of the benefits of technology and of our software is that the world is connected in a way that it really never was before. That being said, it does present it's costly to do so today. So how do you see this moving forward from interjurisdictional transactions?
So I'll say something that's not the most popular amongst banks or some of our partners, but it's a reality. The reason why banks haven't done this is because why would they want to destroy their business model? Why is no one doing this today is a really simple answer. That's how they make money, and they make it at the expense of you. And so what we can do, because tech has evolved, and this is no longer sending money on ships or very complex future markets in which we're literally using telegram-level wires, we can run these ecosystems at 1/10 of the cost as things tokenize from treasury bills to gold to just dollars in general, all this stuff becomes validated on a network and can be settled seamlessly, quickly, and far, far less expensive than before. And so that's what's super exciting, is the ability to give everybody more of their money and keep more of their money.
So looking into the tokenized securities angle, there's a lot of excitement around real estate as an asset class. We've seen the Middle East has strongly adopted tokenizing commercial real estate, as well as exploring property titles and tokenization of a lot of that sector. There's also a lot of opportunity in equity tokenization, both in the private markets as well as the public markets. From the conversations you're having with a variety of regulators around the world, as well as just from your general perspective, what is the particular vertical that seems to be the most likely to be adopted fastest or quickest within these regulated networks?
Yeah, so I'll certainly be interested in your perspective as well, given almost a decade in the space on this side. But I think where I see is, honestly, it's the commodities. It's gold, it's metals, it's that. Now, I sit more in developing economies. This is the clear-cut, easy use case. But I know you've done far more work with brokers across stuff, and so I'll actually swing it back to you here is, what are you seeing as the immediate opportunity, but what is the big opportunity? What is the thing that's the whale that hasn't been touched?
Well, the exciting opportunity in the short term, especially in the US markets with respect to tokenization, I've actually seen is in the private credit and debt markets. The debt markets in general are, interestingly, still very antiquated. They still often don't have a lot of the technical exposure or infrastructure to support in the way that our equities markets have. And so because of that, we're seeing so many opportunities to provide working capital, to provide all types of private debt into institutional counterparties or into high quality issuers, whether that's domestically inside of the US or at large internationally. Especially in these changing global economic times, there are different regions and different sectors that are now becoming much larger providers of real economic value into the Western markets. And so because of that, these are potentially countries or potentially issuers or companies that don't have the traditional financial opportunity that one might expect for the amount of offtake or buy-side opportunities that they potentially have. And the problem for a lot of these companies is that you may have somebody that has agreed to buy a product from you down the line, but they're not putting that money up at first. They're requiring you to have your goods sold or products delivered before that fee is paid, which then creates a significant gap from a funding perspective in those opportunities. So in the private credit space, we're certainly seeing it from the financial structuring perspective, but I do think that manufacturing and working capital is coming next. With respect to the answer, I'm going to agree with you. I've said many times on stage in events like this, as well as in different media appearances, I really see commodities as the largest opportunity. And I'm excited that I get to do a keynote here on stage tomorrow. So make sure to tune into that if you're interested. But we recently just closed on a deal doing a $75 million tokenization and financing of a buyout of an oil refinery. And so emerging markets that need that, it's a key.
Walk us through there, because I mean, this was a super interesting case in the sense of both countries, regulatory body, multiple jurisdictional actors, et cetera. What made this unique? And I mean, I know a bit about this deal. It was months of trying to get it to close, and we were able to do it rather effortlessly. So what made this so special?
Yeah, well, look, it's very difficult when you're syndicating or if you're fundraising for a potential opportunity and you have investors that are providing capital into a particular deal from multiple countries. Oftentimes, the way that a regulated broker-dealer is going to handle the compliance for all of these different counterparties is to use the highest compatible standard of compliance that they will apply to every single person. So if 4 different countries that are involved in a deal have 4 different types or sets of expectations for what they need to sign off on a particular company or investor or where the capital is coming from a compliance perspective, oftentimes brokers will just do a one-size-fits-all of taking all the information from everyone so they can be sure that everything checks out, when often that's not necessarily needed for a particular country. It's just what is easiest for the person managing the compliance. And so that was really a core component here, is using digital rails from a payments perspective, streamlined that effortlessly.
Well, and I think you just touched on a point that we really haven't talked about, but it cuts to the core of all of these conversations. Today in finance and deals, there's always a broker. There's always a third party. That third party rarely acts in the best interest of either side. That third party often doesn't have the credentials they say they do. That third party may not be telling you that the person they have that wants to buy isn't really a real buyer, and instead they're collecting all your information so they can go shop it. How does something like this, and obviously we know some of the markets and exchanges doing this as well, how do these kind of solutions play in to really create a different environment?
Well, especially with a lot of what Global Settlement has built with respect to our identity capacities, we do allow for significantly streamlined onboarding into a lot of the counterparties that are necessary. So to your point, I think that there are a variety of intermediaries that are not necessary at all that we can probably disintermediate. For example, some of the capital sources just need to flow into one potential source where the acquisition company is based, as opposed to regionalizing the different banking counterparties. That being said, for a transaction with which you may need to collateralize or get leverage or debt on a particular asset, while also mixing that with potential fundraising opportunities in crypto or stablecoins or even in fiat, you may have multiple vendors or multiple licensed intermediaries that are needed for this.
Absolutely.
And for a particular investor or for a particular institution, they really only want to verify themselves one time and make sure that that gets disseminated across the different intermediaries. Onboarding multiple different times with multiple steps of compliance and requests for information is, I think, an incredible burden and does really hold up a lot of deals.
Well, and I think this is something that excites, to get to the kind of the ending and where we think the future is. This is where I get excited about CBDCs. This is where I get excited about this. Is if we reimagine what money is, and instead we think of the central bank currency, no matter what country it is, we think of it as the accounting or the financial rails. It gets really exciting when you start to be able to have transactions settle in a stable, settle against gold, settle against a tokenized debt equity. And none of that really matters because in real time, that CBDC, the banking digital currency, can be just seamlessly reading, integrating, and leveraging those assets without actually having that third party sale, transmission into a different thing, move to a different thing. Because ultimately that's what's been happening is, it's the original barter economy that we're seeing turn digital, but it's this idea that our assets no longer have to lose 3% every time we want to move them to a new asset. And I think that's to the point of what the future of digital finance is. That's what's super exciting, is that we can finally imagine a world in which it doesn't matter what asset you hold, it's interoperable to whatever asset you want to purchase.
Yeah, and look, at the end of the day, what that comes down to is cost of capital, right? How expensive is it for you to take the assets that you own and convert them or use them for a variety of financial services that you need? How quickly can you do that? Because time is money. There's a speed element here and there is a cost element here. And so we've seen a variety of different countries, a variety of different institutions that are facing 3, 5, 10% potentially in fees associated with brokering, associated with transaction fees and Forex and market changes, as well as days or weeks of locked funds from a compliance and regulatory exposure side. And reducing these components will increase the amount of deals that get completed, but will return more capital back to the potential investor at the end of the day. That's what really matters.
So wrapping up here and knowing we're going forward, what in the next 5 years, what are you, and I'll make a plug to Global Settlement, what are you most excited about for both what we're doing, but what that'll mean for the future of finance?
I'm really excited to actually have a global economy. I think that there is the opportunity and there's a messaging component. We can talk and communicate, but the rails financially themselves do not work the way that we want them to work today, and they don't work as quickly and seamlessly as they should. It takes me 2 seconds to send you an email and 2 weeks to send you money. That's not going to last forever.
Completely agree. I mean, I think, and to echo that sentiment, I mean, I'm most excited to see a world in which borders no longer regulate how we can move economies, where we don't see, you know, a singular stock market lose liquidity, and because banks can't send them because their counterparties, say in America, are sleeping overnight and it's not business hours, we don't see banks fail. We can now see this entire interoperability of the world happen 24/7 across any ecosystem, environment, geography.
Thank you very much, Ryan, and thank you for our wonderful crowd today. Appreciate you taking the time to listen.
Thanks so much.
네, 저희 파이어사이드 챗을 진행해 주신 두 분께 큰 박수 부탁드리도록 하겠습니다.